So, hello and good evening, and a warm welcome to our Wednesday evening Admiral Markets webinar. It's a great pleasure for me that you are a part of this webinar and that we can talk about trading. And our intention is in this kind of webinar to close the gap between education and live trading. And as I said, it's a great pleasure that you'll be part of this webinar, and it's a real warm welcome to this webinar. So thanks for your welcome and greetings wherever you are. I don't know what's the time where you are. So this is 6 o'clock p.m. here in Germany, and we want to talk about live trading the next 45 minutes. And we want to talk about the real content of a real business plan, because this is a webinar we want to mix and we want to get the close between education and live trading and trading, basically. So master the markets. And if you want to survive in trading in a long-term distance, you have to be a master in trading. So you have to be disciplined, you have to be disciplined about your rules. And this is my opinion and this is my experience in the market. This is the only way you can survive in trading, when you stick to your rules. If you have rules, that's the basic, that's the real foundation. If you want to survive in trading, that you have rules. And we are a great family this evening. And Bob, greetings to Bob, Chicago, the windy city of Chicago. And type it in your chat box if you have any questions in English, please. But you can hear it. I'm a German guy, but I make a great efforts and a lot of efforts that we can talk about in English. And I know I want to guide you through my special rules in trading, that you can, maybe it's your basic in the future as well. Okay, before we start, we have to do our risk disclaimer. You see the information. We are using demo accounts in this trading, and trading with financial instruments offered by Admiral Markets carries a high level of risk, you know. And first of all, if you are a beginner, you have to use the demo account before you take your own money, your real money. It's the worst decision to start into trading with real money. So you have to learn money first. And if you are fixed your problems and if you are experienced in trading, then you can switch to real trading. So we have to stick the rules of this ESMA since August 2018. And you see we have the difference between retail clients and professional clients. Here you can see the new regulations about the restriction of the leverage between of 1 to 30 and 1 to 20 for currency pairs. And here you can see another slide between the difference between retail clients and professional clients. So that's the most important slide why you have to choose Admiral Markets, because we have the best index offerings, index, and of course in euro against US dollar. We use no minimum stop distances. That's the most important thing in trading, no minimum stop distances. Okay, one world, global offers. You can choose Admiral in every kind of in every kind of country. Wherever you are, you will find a branch of Admiral Markets. So, success guides is not a fantasy; it's a formula. It's one of my most important topics in every webinar. If you want to survive in trading, and if you want to be a successful trader, or you want to become a successful trader, then you need rules. Doesn't matter what kind of rules you want to use. It must not be this kind of rules which I use, but you need rules. Success by an accident, it's not duplicable. It's not a stable system. And this is the reason why we are using rules in this webinar, why we are using rules in trading basically. You have to know I'm trading since 20 years now, and I lost everything in my life. Money, family, self-confidence, everything. I was so deep on the ground in my life about trading. Trading can destroy everything. That's the reason why you must change your mind in trading. And that's the reason why you want to talk about education and trading. That's really, really important. So use your rules. That's our rules here. We want to make trades out coming off the correction, because this is a proven positive statistical system. You see the probabilities around 65 and 72%. So if you make sure that the higher trend or the big picture is facing in the same direction like you want to trade, then it's rise up to 72%. And that's the reason why we have to look the big picture first, always. Always have to first look at the big picture. Then you can switch to the trade or the trend size you want to trade. And in this webinar, we have our view at the daily chart and the hourly chart, because most of the people are part-time traders. Very less people are day traders. That's our rules. If you make sure, or if you made sure, after you made sure that the big picture, rule number 7, is supporting you by our 3 templates, I will show you very soon, then you have, and you made sure that you outside of the fair value zone, rule number 5, then you have to use the 4 rules. Valid trend is needed, the maturity of the trend, maximum 4th trend arm, the correction has to run at least 38%, and then you have to wait for the rebound. And we use balance, we use the Heikinashi version of the chart. It's very easy because you have only two candle formation, trend, continuation trend candle, or balance candle. And a balance candle means that there you will find a balance between supply and demand, and it means that the correction is probably, or is possible, is coming to an end. Very possible. So, and rule number 6, Fibonacci and the market profile will show us our targets. So that's the templates which we want to fit to our big picture. If you want to make trades in hourly chart, the leading trend in the daily chart is your big picture. And to make sure that you will find a support by the big picture, we have 3 templates. First template, you find a trend and you come out of the correction in direction of the trend. Template number 2, you use divergences. Divergent means in an uptrend or in a downtrend you have a lower low, but in the RSI on the lower slide, on the lower side on the slide, you have a higher low, and this is a divergence. So the trend is coming to an end, but you will see in the chart a lower low. This means a divergence. This is one of the strongest technical signals you can use to make a long trend, or in the other direction, to a short trade in the hourly chart. Second template. Third template, you have a big support or resist in the daily chart, then you can make a trade in the same direction or as a rebound from the support, from the resist in the hourly chart. Okay, with this in our mind, we switch to our Admiral Markus MetaTrader. So you will find here my expert advisor, because the rules I showed you, I have fixed these rules into an expert advisor. So the expert advisor is making exactly that, what I want to make trades. About my rules, find a trend, a young trend, in the correction, balance candle, and then the expert advisor makes the trend or the trade. And on the right side, you can see the market profile indicator. It shows me if I have an unfair value price or I have a fair value price. The red zone means we are in a fair value price zone, and the green zone means it's an unfair value price. Either we are too expensive or we are too cheap. That's the point why we have to use the price information. The most important things in trading is only trend and price. No more, no less. So, and the result from our trades of the last week, I can show you the result. We have a great result, a profit factor of 1.87, and we make profit into the since Wednesday last week. And I want to show you, because we made 2 trades. We prepared it last week. Maybe you remember. And first of all, we had a trade. We prepared it in British pound, Japanese yen, because we said if we will have here this stabilization at the point of low, and you can see it's so amazing, the price will go back to the point of control. And we use this stabilization in the hourly chart, in the daily chart, as a big picture, that we can make our trade in the hourly chart in the same direction. That's our rules. Let's see what happens. Here is the trade. You see it? Here was the trade. Here was the trend. There was the correction. There was the balance candle. There we went inside of the market, and there was our exit. In, out, earn money. No more, no less. But as you can see, in a processing trading approach, and if you want to be a better trader, we switch the target, or we made 2 targets. We want to make 2 targets, because at the first target, at our Fibonacci retracement, that was red to red, from the 61% to the 161%. There we take out the half of the position, and the next position, the rest of the position, we let run into the market as long as the market kicks us out of the market. So, and you can see the trade will still running. And in which direction? Look at this one. Back to the point of control. It's so amazing, ladies and gentlemen. It's really amazing. It's not a rocket science. Trading must be as easy as possible. Stick to your rules. That's what I have to say about trading. The second trade, because we have still 1 trade running, you can see it, is US dollar against Japanese yen. The same situation. We said last week on Wednesday, if you will see here this stabilization at the point of control, we can use it as a support, template number 3 as a support, and we can use it for hourly chart. And you could see I made it. I took out half of the position at the first Fibonacci retracement, red to red, and the rest I let run into the market. Indeed, as long as this market said it's over, as long as the trend will break. But the trade is still running, yes, you can see. And there is my stop at the moment below this last 0.3. And this is the correction what we'll see here, because we don't have a trend continuation above the 109 Japanese yen. Why not? You will say, because it was a trend continuation. No, it was not. Why not? Because we don't have a close above this 0.2 here. For a real trend continuation, guys, we need, or for a trend break as well, we need a close. Otherwise, the market pick up the limit orders or the stop orders and go down or go in the opposite direction. So always, if you will find a trend continuation or a real trend break, you need a close. So as you can see about these explanations, real trading means a lot of calm and a lot of patience. That's really, really important, guys. Okay, so the trade is still running, and we can We let the market will decide how much money we will get with the rest of the position. We will see, and I am very convinced that we will see the point of control very soon, maybe next hours or days. I guess next days the price will rise up to the point of control. And if not, doesn't matter me, trading is only a game of probabilities. If you are looking for securities in the market, then it's trading the wrong place to make gains, because you will not, and you don't find any securities in the market, because the only thing to survive in trading is you have to stick to your rules. But the market is only based on probabilities, no more, no less. That's the real truth. Don't believe any lies, or don't believe any or any promises of other guys or whatever you will find in internet or on other pages. Don't walk into this trap, guys. Trading is based on probabilities, no more, no less. That's the reason why we talk every week and every week and every week about the rules. I know it's so damn boring, I know. But professional and successful trading, ladies and gentlemen, is really boring. Every successful trader will say that. Successful trading is really boring. Okay, I prepared some trades for the new week for you, and we will see. First of all, let's have a look at the DAX. And today we have a really weak day. The prices went back, or are going back this day, and so you can see it in a smaller time frame. You see it here in Dow Jones. We went back again to the point of control. So in the DAX, in the daily chart, you see we have a little bit increasing prices up to the point of low, as I said last week. We want to go back into the red zone. There we see actually the rebound, and now we are a little bit in a correction. Right? This is a great chance for the next days. And why? I will show you. Look at this one, because we see a smaller trend size there. Look at this one. Movement, correction, movement, a small correction, then the move up to the point of high, and now the correction. You can see how far went the correction, or how far is going the correction, down to the point of 2, less 0.2. That's the reason why the 0.2 and the 0.3 in my trading approach is so damn important. And if you go back a little bit more in the history, look at this one, a great support there. Great support there at round about 11,070 points, round about. So what we can expect in the next days? Maybe the next trend continuation, back to the point of control. So let's see how we can use this chance into the hourly chart. So at the moment you see we are among the red zone. We never make trades among the red zone. Only make trades outside of the fair value zone. Rule number 5. Remember please, the entry must be always outside of the fair value zone. I use that word so often every day. Outside of the fair value zone. So you see below there or above there, but never among the red zone. There's only one exception where it is allowed to make trades inside of the red zone. This means if we have a rebound at the point of low into direction of that point of control, so like here, or on the upper side on the point of high back to the point of control. But never make trades inside among the red zone. Never. Because why not? Because it's a fair price already. You cannot expect that something happened there. So you see it's a great sideways phase here right now. And now we must expect that we will see either we see decreasing prices down to the point of low. That's the situation I want to expect, or I want to have. Why? Because then I can make a long trade up to the point of control. All the other situation we expect increasing prices directly up to the point of control, then we don't have any chances to make trades. We only have a chance to make a trade in this trend size, hourly chart, if the price will go down to the point of low, make there a rebound, make our rules there, trend, correction, and so on, and we can make it down a long trade then there. So DAX is a really important situation for the next trading days. So let's switch a little bit to Dow Jones, first of all in the daily chart, and you can see the price did exactly that what we expected the last days. And I told you last week the expectations, the probability are so high that we reach the point of control. And you can see it, it happened. Look at this one. We came from 21,000 points and we reached during around 4 weeks back to the point of control. Maybe you ask, why is that so important? Let me tell you. Guys, you don't trade Dow. You don't trade DAX. You don't trade gold. And you don't trade euro, US dollar. You don't trade all of that. Why not? You trade the price of gold. You trade the price of DAX. You trade the price of euro, US dollar. And the price, it's real, it's like our normal life. If you buy something in a store, you can see something special offers. But something special offers are taking place during 1 week, not for always, not for everlasting. Or something you go in a store and want to buy something and you said, oh, sorry, that's expensive. I will wait to the next price, I will wait to the next special offer. And you can wait for it. So you see in your own life, in a real life, you buy something stuffs for a price. Coffee, water, bread, whatever. It always have prices. And you buy it for a price. In trading, it's the same. You have a fair price. You said, okay, it's okay for me, I buy it. Or you have a special offer, and you said, oh, I must buy it. It's a special offer. Or you say, or you see, oh, that's too expensive. I will wait. I will wait for a normal price. That's the behavior of every prices in trading. That's the reason why I tell you every time and every day, look at the price. The price always has the attitude and the behavior to go back to the fair price zone or the point of control. What does the term point of control mean? It means there happens the most value, the most supply and demand. The highest value of supply and demand is happen on the point of control. And around the point of control, there is the red zone, there's the fair value zone or the area value, it's called, in other words, area value. It's a fair price zone. That's the reason why we want to make trades always in direction to the point of control or into the red zone. Okay, Dow Jones, we don't have to do anything because we are at the point of control. We are at the at the fairest price ever at the moment in daily chart. So nothing to do in this kind of situation. The same situation in DAX, in Nasdaq, and you could see where the price went on back to the point of control, and exactly, look at this one, it's amazing. It's terrific. 6,870 points. Exactly pinpoint. Picked up this point. And now we are in a normal correction after this increasing a normal correction. And now we have a little bit smaller trend, but we are among the red zone and we don't have to do anything there. Let's see WTI oil. And you see where we are. Look at this one. We were at around about $77. That was the price from October last year. What happened after that price? Look at this one. Back during around 8 weeks. Back to the point of control. Back. That's amazing, guys. That's really, really amazing. You can use this kind of trading based on rules, trend and price for your own trading. It's really easy. The big challenge in trading is taking place in your mind, not on the rules. But the real challenge is to stick to your rules every time. If you don't have a signal, don't make trades. If you have a signal, make it. That's real trading. That's what I teach to my people every day. And we have, look at this one, we have a real trading room, and I can show you exactly at the moment. I have two guys. You can see this is my virtual trading room. We are trading all the day between 8 o'clock and 10 o'clock in the evening. And you can see we are working together with webcams and microphone. So no one is alone in trading. That's really, really important. So we have to do nothing in oil because we are among the red zone. That's really important. So now let's see some trading ideas for just a moment, please. And I picked it up for you. Maybe you write it down. Canadian Japanese yen. Real trading. We want to make live trading here. And you can see why is it a great chance. Look at this one. We have really a real chance here because we see this stabilization at the point of low. Of course, I see we have a downtrend, but now we are in the correction and we can see this stabilization at the point of control exactly here. And we can expect that we want to go back to the point of control. So we want to use this situation in the hourly chart and to make a long trade. And you can see here, we are at the point of control already. And you can see here this trading situation because we have a trend. We saw this correction and we saw the same in the daily chart, exactly the stabilization at the point of control. And if you will find here some balance candles, then you can make a long trade to the upper side. This is the only exception when we can make trades, as I told you some couple of minutes before, when we see a trend and the correction ends at the point of control. This is the only exception where we can make trades inside of the red zone. Okay, what we can do then, if you will see here a balance candle, put your order, I will put my order, and I will make a trade here to the long side. Okay, maybe you will ask where we can place the stop. It's really easy. The stop will place here below the point 3. Here must be placed the stop. And where is our target? In this case, we have to use the Fibonacci rules. Red to red, blue to blue, green to green. Let's see. This is the movement. And we can see we were at the point with the correction ends at roundabout in the deepest point at 68%. So that means that our target, we make trades from green to green, this one in this case from 68% up to this 18% to the upper side. So there will be placed our first target. If we will reach this first target, put out your the half of the position and let the price running. Let the trade running as long as the market says it's over and will break the uptrend, and yet you can go down, you can get out from the market. But don't intervene at the market. Never intervene in your trading. Never. If you have a running price, if you have a running trade, let's working. Let's working and let the market decide how much money you will get. You will see you will get more money more often as you think. Trust me. I made it a lot of times. Trust me, it will happen. But you must make this experience. But you cannot make this experience if you intervene into the trade every time. Let the market working. Don't tell the market what the market has to do. Don't tell him that. You have no idea what the market will do. But the trend continuation, guys, is more likely than a trend break. So this is a great chance in Canadian dollar, Japanese yen. Next chance, Swiss franc, Japanese yen as well. You see stabilization here at the point of low, the same situation as we had here in September last year. And here we will find our stabilization and balance candles at the moment. Same situation, or almost similar situation as in Canadian Japanese yen. And here switch to the market. This is our signal. You see, one of the three templates in a big picture. We don't have a trend, but we want to go long. So, but we don't have some divergences. No, you don't. But you have a great support there at the point of low. You see that the balance candles here, it means the market is telling you this, the true story. We see there a balance between supply and demand. This signal from the big picture you can use for your hourly chart, and the best situation. You are in a green zone below, and the point of control is placed above of you. We want you to go up at this point. So, and now you can see you have a trend. You have a trend already. Look at this one. You have this trend already. And let's see. Movement, correction, movement, and now the correction. But we have to use, oh, that's wrong. I want a green color. Movement, correction, movement, correction. But now you have to use the rules. So rule number one, you have a trend, right? Okay, you have. How old is it? The maturity of the trend, it's the first correction or the second correction. It's really young. And now we have to use Fibonacci. And we use this one. Look, we measure the movement. And now we don't have a close. So let's make, you see, we don't have actually a close below the 38%. That's rule number three. You need a correction at least 38%. You need a very clear close above or below this point, the 38% Fibonacci. So wait, if you will see a close below this 38% Fibonacci, then wait to the balance candle and then make your trade. And then you can see how deep is the correction going. Then you see how far is your target. You will see it maybe red to red or blue to blue or green to green, because that's a bad thing here in MetaTrader. I don't can switch the colors here, because the expert advisor make it automatically. So let's see if I find something here. Where is it? I will find. Let me see. Let's see. No, I don't have any example here but you know what I mean. I think so. Okay, that was our two proposals for the next week. Maybe you write it down: Canadian, Japanese yen, and Swiss franc, Japanese yen. Both of them, of that currencies we want to use in the hourly chart to make trades, and we can talk about it next week on Wednesday. You can, of course, you can use the same situation, or you see, for example, you can use this for day trading as well. So you see here, I made here a trade. You see here, I made a trade here. That was a 15-minute chart. So I saw that we were at that time in the 1-minute chart. Let's see, maybe I find it. Let's see. No, it's too late. So, but you can see it's always the same. Look at this one. Price, trend and price. Did you see, or do you see what happened there? Look at this one. You can see trend back to the point of control. And always it's an amazing trend game. That's the reason why I'm talking about to you every time. Look at the trends and look at the price. So you can see the Dow Jones. Look at this one. It's so amazing as well. Dow Jones at the moment. So sometimes they make trades in 1-minute chart. And at the moment, I'm expecting that the price will go back to the point of control here. So you can use this situation to make short trades maybe in 1-minute chart. Look at this one. Can you see it? Can you see it? Guys, it's so amazing. Look, we were at 24,697 points. At what time was it? At that point today, maybe 20 minutes before 5 o'clock p.m. Look at this one. Look at this one. Guys, it's terrific. It's a trend. And can you see where the price went on? Down exactly. Exactly, guys. It's unbelievable. Exactly to the fucking point of control. Can you understand me? Why I say it every day, and why I'm not going to be tired to say it every time. Look at the price. Trade the trend and trade the price. It's really, really easy. But before you can make such kind of trades, you know something of yourself. What do you think? How many times, how long are you a trader? Since when do you trade? Type it in the chat box for me that I can see it. Please type it in the chat box. How long are you a trader? Since what time do you trade? 1 day, 1 month, 1 year, 2 years? Type it quickly in the chat box for me, please. Then I can see it, and when we can talk about that. 8 years, Bob, 8 years, great. 8 years. Not trader yet, just started. Borislava, great. Then you're right here, because we learn trading here in this kind of webinars. Or you can use my homepage, how-trading.com in English. We make education there. Intraday, 1 year, then great. 1 year, still on demo for 3 or 4 months. Great. That's amazing. If you're a really young trader, it's the best situation. Because I have the most problems I have with old clients. They have a long experience in trading because they are focused on the wrong things in trading. So if you are a really young trader, you can see what is working in the trade or in the chart or let's see, in trading. So I can help you to avoid a lot of mistakes in trading. So you have to know I'm a trader since 20 years now. And I guess I made every mistake you can ever make in trading. I swear I made every trade. I lost so much money in trading. So, and the age is not important. We are everybody of us, we are young traders in our heart. We are young in our heart. The body, okay, I know the body is old. We are very young in our heart, and that's the most important thing. But the oldest client in my trading community, you cannot believe it. It's 81 years. 80 is almost 80 years young or old, and he's a client of mine. He wants to learn trading. It's amazing. It's so terrific. It's an amazing guy. I love him, and I learned something. I learned a lot of things about him. So you can see it here: red to red, green to green, blue to blue. That's what I see. What I said to you. If you see a correction, then red to red, blue to blue, green to green. That is what the expert advisor makes it by itself. Okay, thank you. 3 or 4 months. Great. Please, let me tell you something. Don't make any experience. Rules is the most important thing. And that's the reason why we talked in 3 weeks now about the business plan. Yes. What's the content of a business plan? Why do you need basically a plan? Because the last 2 weeks we talked about who you are, what kind of person you are, where are your strengths and where are your weaknesses. We talked about it. You can you can watch the videos on YouTube channel of Admiral Markets, of course, if you want to repeat the last 2 webinars. We talked about this topic. Today, the last minutes, I want to talk about what kind of person you are about risk. Are you a risky guy or are you a security guy? Are you looking more for risk or are you a kind of person you are very calm and you are very soft in risk? That's a person of your own attitude. What's your personal risk attitude? Let's see. If you are a risk taker, if you are a highly risky guy, of course, maybe you risk round about 5% by one position. Don't do it. Don't do it. Don't do it. Let me tell you, I made this experience a lot of times. But you have to know one thing, guys. Not every trade is going to be a winner. Maybe you make 5% in a winning situation. But if you lose money, you lose 5%. So every experienced trader will tell you that the highly risk is 1%. So maybe you can use it, but don't forget how is your brain working. You have to be very sensitive about your brain. Don't forget that. Or you are a risk-averse trader. Then maybe 1.5 and by one position. I have one proposal for you. It's about your own personality. Let me tell you a story. I got an email last Friday of a very critical guy. He wrote me an email and he told me he lost about 75,000 euros in trading. He was in the hospital for weeks about a break, about psychical problems. He was in by the doctor. It's amazing. That's the reason why you have to figure out what kind of person you are. What's your own personality? So, where is it? If you are a demo for 3 or 4 months, I know people in demo, they use an account size of $100,000. That's stupid. That's really stupid. Why do you want to use an account of $100,000? Is your real account later the same size? I know so many people, they want to trade with real money later with $1,000 or euro, maybe 5,000. But in the demo account, they have 100,000. Don't forget how your brain is working. Be careful about your thoughts. It's idiotic. It's stupid. It's absolutely crazy to use in demo account a account size you would never use later in real time or in real trading. If you learn trading, and the most important thing in trading, in demo, use the same size you plan to use later in real trading. And never forget maximum 1% of by one position. That's really important. But figure out what kind of person you are. Where are your strengths and weaknesses? Where are they? And then figure out what kind of person you are. What's your own personality? How many of you, last question for this evening, then we are done. How many of you, be honest to me and to yourself, how many of you have a plan, a business plan? Type it in the chat box. All of you are traders. Do you have a business plan? How many of you have a trading plan? With rules, with targets, with plans, with dreams, whatever. How many of you? Bob, you have. Great. But it seems, not planned yet, still in search. Great. Please, I place you. First, make a business plan and then make a trade. So we are 16 attendees this evening, and we have two guys. One, Bob, only Bob have a plan, the other not. Dan, not strict plan. Believe me, guys, you cannot be successful in trading without a plan. It's absolutely impossible. Too many years I don't have a plan. I didn't have a plan. And I wasn't successful. At that moment, I planned my trading career. Then I become a successful trader. Believe me, guys, don't waste your lifetime. Don't waste your lifetime. Before you make the next trade, promise to yourself, write your plan down first. Business plan. You will find the whole webinar about the business plan and the content of the business plan in this webinar. Next week we continue with the next parts of business plan, like what you have on experience, and I will tell you some stories about my own experience. But if really, believe me, I don't lie to you. I only tell you the truth because I don't have a benefit if I want to tell you lies. Why? I don't have a benefit if I tell you lies. So I have a community. I support almost 110 clients in my trading approach and my trading service. So believe me and trust me, you need a plan. You cannot be successful in trading without a plan and without any rules. That's all for today. I hope you learned a little bit. You can visit my homepage, dowhow-trading.com. Switch to the English version. You will find any information. And if you have questions, feel free to write me an email if you want. With this in our mind, I wish you a great evening. We will see us next week, Wednesday, same time here. And take care. And last sentence, be careful about your thoughts. They are the beginning of your actions. Bye-bye, take care, and enjoy the rest of your day.